Okay, first and foremost, let me just say that this group and what we have accomplished and what we've been through in the last 6 to 8 months has been nothing less than incredible. I have seen people come into this group, completely change their situations around simply by utilizing the tools at their disposal. And now do I mean the tools from FudSwap specifically? No. These tools exist elsewhere, and that's the beauty of this current day and age. If you want to learn something, by God, you can. All you have to have is the willingness to learn and the desire to change your situation. Now, if you're currently in a situation that you're completely happy with, then why change it? But if you're one of the many who wants to change your situation, there has never been a greater opportunity to change your situation for the better. And I'm not saying from a market standpoint, I'm saying from a general life perspective, you have never had as much tools at your disposal to utilize, to learn, to help others learn, to research, fact check, all of the above. You don't have to take anyone's word for anything in 2022, and that is a godsend, because once you start taking the initiative and looking into the things that you're interested in, you will be blown away at what you find, because what you will find is not what is practiced in mainstream society. That's because mainstream society is changing. Whether you like it or not, it is. And we're going to go over basically a quick recap on the group core logic from the beginning and remind everyone just how difficult this journey has been. So from the beginning, what have we observed that kicked off this group? Gaps that occur on earnings. And over time, we learned that those gaps that occur on earnings also, for plays that would fit our criteria, would break the RSI. Now, what do I mean by break the RSI? Well, the RSI has two main levels, 70 and a 30. The 70 on the 14-day measurement, that means it's overbought. The 30 means it's oversold. It's the easiest way to make plays and pick play opportunities. It's just based off simple supply and demand, 70, 30. Over 70, it's overbought, likely going to come down. If it's oversold, likely going to go up. Now, not always. This is why you have to look into multiple facets of things in the market. Number one, news. You always want to gauge news headlines, not to take as accuracy, but to take and then compare it with your notes that you have, that you've researched, and you will quickly find that play opportunities can be derived from headlines alone, if you know the information beforehand. So, for example, like China. We know that China's been in a COVID loop for the last about 3 to 4 months now, because they're not ready. There is a new technological frontier called Internet of Things being implemented. The infrastructure for it has just been fast-tracked in Japan, and it's likely going to be fast-tracked here in America. That's what the infrastructure bill ascertains, is the need for development infrastructure for Web3 and the upcoming IoT technology that's going to benefit multiple sectors in the market. So we first discovered gaps on earnings, and this is what we began to play off of. We noticed that after the gap down that occurs on earnings, you can play a quick recovery. And then if you play that monthly's expiration, because at first in the group we avoided weeklies because we were specifically playing illiquid plays that were used as non-cash collateral in the repo market, which we ended up reverse engineering and finding out that's exactly what we were doing. So, of course, that's the beauty of this group, is that we don't stick to one strategy, because one strategy can't work, because the markets evolve over time. And with the markets, we have been evolving over time because I have been staying up with the information that's been coming out, major developments, major filings, major news, major world events, major world leaders and summits and all that shit. It's all necessary. Now, do I do this because I feel like I have to? No. I do it because I thoroughly enjoy the transition that's taking place on our planet right now, and it is a big one. So, gaps on earnings, broken RSI, and you can see right here that this is when the RSI gets broken. Clear sign to get some calls or shares, and you will over time, that's the thing, you always want to make sure you have enough time, because with options, if you're holding options and it's not moving up, you're losing money on your contracts, because momentum helps contracts gain value, up or down. It's part of the Greeks. However, we at FudStop try to simplify everything in a way that even a retard can understand. And by God, we've done that. I have seen, again, people that make astronomical amounts of money, and I've had several people reach out to me thanking me for the group and everything, but y'all don't need to thank me. You did this all on your own. I only gathered materials from the outside world, brought it into one place so we could all use it for our trading benefit. This is how you change the game. You bring people together with similar goals, and you bring all the tools that we can all use collectively together in one spot. And that's what our group is. And again, grateful for each and every one of you. Wouldn't be here at all today where we are without each and every one of you, and I'm absolutely aware of that. So I do appreciate everybody. But we're moving forward. Those in the group since the beginning have seen our logic evolve over time. That's not because of any other reason other than the fact that the market has been evolving over time. If you haven't noticed, what you've just lived through in 2020, 2021, and in this year here today, it's never happened. The levels in the repo have never happened. Not even close. Not even close. Sure, it's easy to go and look online on Twitter to all the regurgitating artists out there who also have no idea what's going on, because that's the easy thing to do. There's people in the industry that have no idea what's going on because no one knows where to look for good information, or they're too complacent to change their current ways, and that's a detriment to humanity. But we keep moving on. So we're ascending yet again, but this time it's going to set more with home, because we're going to be playing off of gaps on earnings, but we're going to incorporate the new defined IV methodology that was just put out by the OCC. And I don't care how long you've been trading, if you haven't read that filing and understand it, your current strategy will not fucking work, because they changed the game big time. And they've done so in a way that because we've been up to speed on the current changes thus far, this is how we're able to quickly adapt to the new situations thrown at us by the monetary policy from the Fed, which is in control of this entire fucking thing. They have been since 2019, since they entered into this lender of last resort, and they're going to stay that way until the situation is resolved, which has all been LIBOR to SOFR. Now, what is LIBOR to SOFR? Well, I'm going to explain the why first in this video. I'm going to explain why all this shit happens, why you've been seeing tickers move together for the last 2 years, why you've been seeing the news media headlines the way they are about Russia, China, all that shit. It's all because of the change that's going on. United States is playing catch up in the technological frontier. China is ahead of us. Japan is ahead of us in Web3 development. That's what all this bullshit about China in the media is about. They don't want you to know we're behind China and Japan, because we're America, we're the greatest country on earth, blah, blah, blah. We have a president that would rather take to Twitter than actually solve real life problems. That's what our countries became. Now, if you look on the other side of the world, in the West, they're actually non-democracies. However, they have a higher functioning middle class than we do. Now, why is that? Well, despite all the FUD you've read in the media, and despite all the FUD you've heard from your friends or loved ones who also are misled because they've heard shit that's only been regurgitated, that's not the case whatsoever. China's a happier country than we are, and they have been for the last 6-7 years historically, because they see the importance of skilled labor, education, and many other areas in this country that are suffering today. Now, this is a normal options chain. Typically, for the last 2 some odd years, whenever you looked at an options chain, this is the makeup of it. You will see at the money the lowest IV, and at the money is just near the current price. So you can see here that at the money, on the put side here. Our lowest IV is at the money. Lowest two IVs are at the money. Now, as soon as you start going deeper out of the money or up in this options chain, what do you notice? The IV gets higher. And I had to pick one from today because, again, there's no historical IV yet here. But I did just order that for the group, and I'm working on building commands for that as well. And we will also have earnings crush commands and a earnings crush percentage chance and some other metrics as well, like liquidity, how much liquidity the stock has, and things like that. But generally speaking, IV should be lowest at the money and increase the deeper you go out of the money, and also increase deeper you go in the money for both calls and puts. This is what we should be observing across the markets. However, this is what we observe. We observe this shit. The lowest IV is not at the money. It is well in the money for the put side and out of the money for the call side, and vice versa. So you're either seeing the lowest IV deep out of the money for calls or deep out of the money for puts. This is unusual. Very unusual. Now, the question is, why is this the case? Well, I don't know if any of you remember this when I used to talk about it, but I'm going to read this out loud. Funds without IFL orders. The SEC relief allows fund families without IFL orders to establish and participate in an inter-fund lending facility. And that's what an IFL order is, inter-fund lending order. Basically, BlackRock owns an ETF that lends to BlackRock's other ETF that's inside of a mutual fund, that's inside of an index fund, that's inside of a money market fund, that's lent through the repo, that comes back through, transacted with Fidelity, and it comes back full circle, and God knows what it is or what's inside of it. This is how they've been sustaining for the last better part of a year and a half. Now, again, this relief, this was allowed in 2020 during the COVID era, of course. Basically, it's going to allow them to participate in these orders, provided that the fund satisfies the terms and conditions for relief in the applicable IFL precedent, including with respect to whether it may participate as a borrower, except it needs to not satisfy the condition in the recent IFL precedent requiring prior disclosure. So, again, relief from disclosure, inter-fund lending. They also, prior to relying on the relief for the first time, the fund notifies the SEC staff via email, at email protected, that it is relying on the order and identifies the specific IFL precedent that it is relying upon. 3, the fund discloses on its website, prior to relying on the relief for the first time, that it is relying on the order to utilize an inter-fund lending and borrowing facility. And number 4, to the extent the fund files a prospectus supplement or a new amended registration statement or shareholder report, while it is relying on this relief, it updates its disclosure regarding the material facts about its participation or intended participation in the facility. So again, they were provided relief through the Fed, through the SEC. Everyone was playing along, helping fix the big issue of LIBOR to SOFR, forward-looking rates to secure foreign interest, things like that, of the countries that are ahead of us in certain frontiers. Now, with all this being said, I want you to pay attention to one fucking area that I've been talking about all year, that I'm banging my desk about right now. It's the repo market. 99% of everyone that I've talked to does not know what this is. And if they think they do, they're complacent and they haven't read the documents. Old man repo, if you're still out there, you're fucking wrong, and you've been wrong this whole year. Now, again, this is BlackRock, Fidelity, and Vanguard's portfolios that you can go see on Sec Edgar, on Fintel. This is what inter-fund lending looks like. I have a Vanguard ETF pulled up, and within this Vanguard ETF that's pulled up, you have another Vanguard International Growth Fund. You have a Vanguard Short-Term Investment Grade Fund. You have a Vanguard Explorer Fund. You have a Vanguard U.S. Growth Fund Investor Shares. And you have Vanguard GNMA Fund Investor Shares. Now you see how these have odd-looking ticker symbols? That's because these are STIVs, or short-term investment vehicles. And they're used with the Fed in the inter-fund lending market, which is the market that was dying before COVID. Now, look at BlackRock. They have their BlackRock cash funds, their Treasury, SL agency shares. Is that a stock ticker and a treasury together? It sure fucking is. That's because everything has been being financed through the discount window. And they've been doing this to figure out, okay, what's been pledged, what's been repledged. They take the repledged shit and separate it from the non-pledged shit, and that's how you get your encumbered assets and unencumbered assets, which if you've read and followed the Title 12 banking regulations that were filed on July 4th of 2021, the net stable funding ratio, it all ties in. Now, I know it's complicated, but you have to understand, by now, hopefully, you've learned that I like to lead from integrity. I have been keeping tabs on all of this shit that I'm telling you about. I'm not even reading off of notes. This is straight from the research I've read, and it all lines up like ducks in a row. So when the logic changes on you, understand there is a reason for it, and I will always disclose that reason. Now, as far as the logic goes, for the group, the logic has not really changed that much at all. We're still playing off of earnings. We're still playing off of gaps. And the RSI is still a very reliable indicator to determine when a reversal is due or appropriate. Now, does it always work? No. That's why we have an 85% win rate. But you yourself will get in your way more than anything else because, number one, you will make too many decisions. Number two, FOMO. Number three, you name it. Really, impatience and FOMO are the two biggest ones. And not giving yourself enough time. Making too many decisions too quickly. Those are the killers. If you slow down and you look at the markets and you look at what's going on, everything's moving together because it has to. So if you play off a SPY, you're also playing off at the 200, 500, 600 tickers that are also linked to SPY via collateral chains. This is real shit. And it's all because of a reason. We need to decline our debt because we have no working capital left to invest in the new technological frontier, which is Internet of Things. Now, if you add up the total portfolio value of the three biggest players that are also working closely with the Fed in the repo market, wouldn't you fucking know, their balance sheet, the Fed's balance sheet, is about $8.87 trillion as of today. If you look at the total AUM for these three big players, do you think it's a coincidence that the Fed's balance sheet is $8.87 trillion while aggregate of these are just three of their portfolios. This is BlackRock Inc., Vanguard Group, and FMR LLC, totals to more than the Fed's entire fucking balance sheet. This is by design. It's always been by design. And that's all that matters. The YouTube vids, the news, the clickbait YouTube thumbnails, none of that shit matters because none of them are talking about this shit because they don't know. And sure, some are. But what's their intent? Is it to capture money with another group of retards in the market at the same time? No, I doubt it. It's just to tell you and get you to see. But we're doing it different. We are not only reading about what's happening, we're putting our own fucking money into this market and we're actually capturing profit because of it. That's the difference. They don't do that. We do. And we know what works. We know what doesn't work because we experience it on a daily basis. Now, that was the why. The how will be shown next. Everything is rapidly changing. Keep that in mind. And we are staying on top of it. Because that's what this group's all about. The new technological frontier is coming. Nobody here, none of their FUD can stop it. And if we're wrong, the Fed's wrong and everyone's wrong, so it doesn't fucking matter at that point. Now, Internet, before I let you go, of Things growth. This is the Internet of Things. You've probably never heard of it because they don't want you to know about it. Because, again, it's the future. It's already the future. Japan just got fast-tracked for this. This will help so many sectors. This gives a use case to crypto. It gives a use case to crypto. NFTs provide no fucking value. It's hype train value. If someone else, if the hype dies, it's like most of the YouTube channels you watch. If the hype for AMC and GME dies, Boss Blunts has to go get a job. Bunch of other people have to go get a job. That's the reality. That's why they feed you the hype, because they need you so they can keep their current lifestyle the way it is. Now, as far as yourself, only focus on you, the tools in front of you, your own eyes, and your own understanding. Because without any of that, you can't change the situation. And it's never been easier to learn. And that's what the group's for, is if you have questions, ask us. I live in the Discord for this purpose, to help those who don't understand what's going on. If people have questions, I do my very best to try to help and explain things. And yeah, there's a fuck ton of information going into this. I'm not going to lie. There's a lot. I've done more work the last 2 years than I've ever thought I would ever do. Now, I've enjoyed a lot of it. It's been fascinating. But the thing is that I could have done this a long time ago. But I just started to do this, year and a half, 2 years ago. If I would have started doing this, thinking this way, acting this way, working this way towards information, just imagine what you could do with yourself. So anyways, the why is not too much of importance to you. It's the how. I've put the work in. I've put the time in. I've looked at the research. I pretty well understand what's going on. And you've seen the success we've had in the group. You've seen the accuracy we've had in the group. And why we do have some salty members who can't handle their own losses, that's on them. If they want to be children, that's fine. And they likely will filter themselves out over time. But those majority of the group, the adults who understand what's going on and understand that this is not easy to do, especially from my standpoint. It's not easy at all to get things right. With always that risk looming that, you have other people's money that they're potentially at risk here. And, I don't want anything bad to happen in someone's situation because of a trade. That is why we always must practice risk management. Don't ever YOLO into a play for no reason. And if you do, don't use your whole fucking port. Just use $10 or something. And for God's sake, paper trade. You can test out endless amounts of strategies with paper trading without ever risking a dime, and you learn from it. So these things are just to take to mind when I bring out the next half of this later on. Because, again, the only thing that matters is where we're headed. And where we're headed is determined by what happens now. And what happens now is built off of what happened before. That's all it is.